Hello and welcome to this very special series that we're kicking off on ORF. Discussions on this particular series, what we understand by green finance really and why it's important, not just for countries, but for investors and most importantly, for citizens. The first conversation we thought should be both broad and deep, and that's why I have two very special guests joining me to talk about that. Kate Hampton, who's CEO at the Children's Investment Fund with a deep understanding of the subject, and Jayant Sinha, who's Member of Parliament and of course has been passionate about ideas around green investment for a long time now. It's a pleasure to have both of you on the show. Thank you very much for joining in. Mr. Sinha, first question to you, which is really more of a brass tacks and building the pyramid kind of a question. What is green investment and why is it important and imperative at this point in time?
Green investing is about investing in companies that help us get on a very robust decarbonization pathway. And it is extraordinarily important that we do that for two reasons. One, because India has made some very notable commitments, NDCs, for the Paris Agreement. And therefore, for us to be able to achieve that and assist the world in getting to the 2 degrees centigrade, 1.5 degrees centigrade target, we need to be on this decarbonization pathway. So that's one very important reason that we should be doing it. And the other very important reason that we need to do that is because, in general, green industries are industries that are not just long-term sustainable from a decarbonization perspective, but also because they tend to be more job creating. And then they tend to open up new frontiers, new opportunities for growth as well. So whether you look at it from a decarbonization perspective, which of course is required for India and the world, or whether you look at it in terms of job creation and economic growth, it is a win-win on both counts for us to do green investing. And which is why not just in India right now, but around the world, whether it's in Europe or the United States, everybody's talking about a Green New Deal, and particularly in light of the Corona pandemic, where economic growth and job creation is so very important, pursuing investments in green industries, in sustainable industries, I think is something that is good for everyone.
Kate, let me draw you in at this point and sort of zoom out for some global perspective, both for developing and developed countries. What do you see as the importance of green finance with specific reference to, looking at climate investment and closing that climate investment gap in developing nations such as India?
Thanks. So I think it's really important to put this in the current context of the COVID crisis and COVID recovery. So we have to grow out of this crisis. We can't have another round of austerity like 2008. And in fact, there is a glut of savings around the world with global interest rates at an all-time low, negative even. But at the same time, risk premia in developing countries are increasing. So essentially what we need to do is have a financial system that helps us reduce and share risk across the world to ensure that those risk premia come down and the return-seeking capital that's widely available in the world can go into the amazing opportunities for green investment in India in particular, but also many other countries. So what we need is the right kinds of financial institutions and structures and expertise, as well as regulation. So finance ministers have put together a coalition on climate action. You've got the network of greening the financial system of central banks and prudential authorities. So there's a lot of conversation already in the financial system. And we also need specific instruments that will drive this capital into the huge green investing opportunities in developing countries, because that's what will really close the gap on the net zero world that we need.
Mr. Sinha, that's the thing about 2020. Everything has changed into a post-pandemic lens when you look at it. And two key takeaways, as Kate pointed out. One is the need for emphasis on health, and the other, of course, on environmentally sustainable decisions. At this point, is it your sense also that there's probably going to be much more by way of fiscal policy or policy from governments in order to push green finance?
That's already happening, Mitali, as you can see. Very many countries are already saying that the kinds of investments that they want to put to work right now during the Corona pandemic to accelerate growth should be in pursuit of a Green New Deal, should be in pursuit of sustainability, green industries, decarbonization. So already, exactly as Kate was saying, we are seeing those trends play themselves out. And it's very important, I think, for India as well to take this opportunity, particularly when capital is available, capital is looking for sustainable investments, to take advantage of the broad array of opportunities that exist in India, whether it is in renewable energy, whether it's in food processing, electric mobility, water. There's just a whole range of opportunities in India where we can take this capital, which is now available in a way that we could not have anticipated before the pandemic, and really put it to work. And again, as I said, this is a one where everybody comes out a winner.
Mm. Kate, before we talk about the size of investment that's required for opportunities such as these, I want to understand from you what the value might be for private companies looking to invest in projects like these in developing nations. I mean, should the barometer be some kind of revenue model? Should it be something else? What would you say should be the elevator pitch for someone looking to get private money into green finance?
So it depends very much on the sector. So if you look in the energy sector, renewables are already much cheaper than coal, for example. So you really don't need much of a subsidy. What you do need is the removal of barriers that may exist. So that means usually a very clear policy direction, and the removal of administrative barriers and other things. In mobility, we're going to achieve parity between electric vehicles and the combustion engine very soon. Other sectors are potentially further behind. And so there's already a very clear return story in a wide variety of sectors, and that number of sectors is only going to increase. So I think you need to take a differentiated approach, and that requires a certain amount of expertise. And I think the real problem often that we have is people overestimate the risk of greener technologies because they haven't used them before. It may be in a particular sector or in a particular geography that there's an absence of experience, and that inflates risk premia. So I think you need a combination of a clear policy direction, good financial structuring, and really good expertise in financial institutions. And there's no shortage of opportunity for the private sector.
Let me ask you both this, and let me begin with you, Kate. The danger is, of course, of overreach in terms of targets. And as the report points out as well, there are targets which have been indicated by organizations like the IFC, saying that India's estimated climate smart investment potential is more than $3 trillion. Now, we're a large mile away from that at this point. What kind of realistic money targets should be set, you think, while approaching this?
So I think sometimes people overestimate the money targets versus the sense of direction. So I think what's number one is to have a very, very clear policy direction. And Mr. Sinha mentioned India's NDC. It's likely that India is going to overachieve and has an opportunity to increase the ambition level. If India sets a really clear policy direction over the course of the next year in the run-up to COP26, then obviously that will set a really strong signal to the financial sector and to the business sector, including globally, that India is a place on a robust course for decarbonisation, and it's a place where long-term investing will be welcome. So I would say number one is absolutely the strong policy signal. You've seen Europe introduce a Green Deal that's crowding in investment in green sectors. There's still a lot of work to do. I think when it comes to the amounts, I think it depends. India has a very strong development bank infrastructure already. And I think what we need is funds that can align international capital and help investors discover new sectors in India. So it depends very much on the specific purpose and the sector, but with clear policy direction and good collaboration between public financial institutions, private financial institutions, and specialist funds with equity, first loss debt, those kinds of instruments, I think India could make very rapid progress.
Mr. Sinha, I want to get your thoughts on technology, which will be the other arm of this entire, setup. But before that, your thoughts as well on what kind of financial targets should be set. I think estimates are as high as $200 billion, but we are currently at about half of that, $100 billion annually.
Yeah, Mitali, as a former investor, I'll tell you that capital is never a constraint for the right opportunities. There is plenty of capital around in the world right now. The world is awash in capital. The challenge for us is to find investable opportunities. And that also in some ways is not a bottleneck. The real bottleneck at the end of the day, I have found as an investor, is high quality management teams. And if you have high quality, high integrity management teams that are going after some of these very sizable opportunities that exist, again, as we've discussed in renewables, in food processing, in water, in electric mobility, each one of these markets in India is billions and billions of dollars in size. So if we can get the right teams with the right expertise going after these opportunities, then the capital will follow. Now, as far as capital is concerned, there is one area where I think in India right now where we are lacking and where I have been writing and speaking about considerably on this set of issues is for growth financing. So in India, what we are able to do is early stage financing, getting 3 million, 5 million, 10 million into a company. But when we really need to scale them to a national level in a market as large as India and maybe even to a global scale, we have to put 25, 50, 100 million in as growth capital. And that in India is proving to be difficult to find checks of that size. So as we structure investment vehicles, we need to make sure now that we've got the early stage part dealt with, that we have enough funds who can invest billions of dollars around these fast scaling companies that really are going after these big spaces. I mean, part of the reason why companies like Tesla and others have been successful is because they have been able to mobilize sufficient capital. So if we can get the right teams pointed at the right opportunities and we have the right investment vehicles at each stage of the investment cycle, I think this whole transition towards a much more sustainable economy can be dramatically accelerated. And believe me, we really need to dramatically accelerate it given the rate of first of all, of global warming and carbon emissions, but also because growth right now coming out of the pandemic is an absolute imperative for the entire global economy. So it's really, really incumbent on us to be able to put in place this financing chain so that we can really accelerate the growth of these companies. That's going to be absolutely crucial. Now, what should be the targets? That's very hard to say. Again, as I said, that's gated by the kinds of teams and the kinds of business models that these teams come up with. So we will have to wait and watch. But I just want to conclude by reinforcing what Kate said, which is policy predictability, policy stability, and understanding from policymakers around the world that they need to support these kinds of ventures, that this is an overriding priority for the global economy. That policy direction and that policy stability is vital.
Let me draw you to the third spoke of this wheel then, Mr. Sinha. On one hand, there's policy. On the other, of course, there is finance that needs to be amply available. And then there's technology. On that front, how much work do you think has been done? What do you think the thrust should be in terms of tech development?
You have to think about technology in three different ways. I mean, there is technology that's in the labs right now that typically will take 5 or 10 years. So we have to invest in that research. We have to allow it to develop and mature. Then there's another bucket of technology which is more in the pilot stage. And fuel cells are an example of that. Certain types of electric mobility type applications are a part of that, like e-buses. Buses are doing well, but e-buses still have to be proven. They're still in the pilot stage. But then there is technology that is at the scalable stage, where literally it's a proven technology, right? So you can take solar power. It's totally proven. It's ready to really scale up. Let's take electric cars or electric motorcycles or electric two-wheelers. They're absolutely ready to go. Let's scale them up. Let's take recyclable packaging, for example, for food containers, etc. That's ready to go. But again, it needs to get scaled up. So we have technology in all three buckets. Technology that's still in the labs, technology that's in the pilot stage that will still take 2, 3, 4 years to really get shaken down. And then there is technology that's ready to scale now. And we've got opportunities on all three buckets. But we need to make sure that we understand the maturity of these different technology areas and platforms and invest accordingly.
Kate, there's a bit of a Jekyll and Hyde situation though for financial systems, globally. While there is ample liquidity and it seems like markets are awash with it, there is also the reality that many financial systems are struggling. They are probably going to face a second wave of, some kind of non-performing assets. Liquidity has been tight in many non-banking financial sectors, in the banks themselves. Given that context, especially for a market like India, do you feel India is ready to take this on as a vertical, the Indian banking system, the Indian financial system?
Yeah, so I'm not an expert on the Indian banking system. I wouldn't pretend to be, but I think there are some very important things to bear in mind. I think we are going to have to run fiscal deficits across the world, and the countries that can do it are going to have to do that with some monetary financing. There's no question, that's already started. For the governments that don't have the ability to do monetary financing, there will need to be international instruments to support them using the balance sheets of the sovereign central banks. So there is going to be a real need for coordination and international solidarity as part of the urgency and ambition around growing out of the crisis, as Mr. Sinha says, and also climate ambition, as we've both discussed. But I think India's readiness for investment is very, very clear, and potential attractiveness as well. Even if you just take something like the cooling sector, India has very low penetration of cooling technologies. There's a huge opportunity for massive amounts of efficiency for India to leapfrog the very inefficient cooling technologies of other countries and to reduce the need for peaking power in big cities. I mean, that's just one example of an area where there's huge appetite for growth globally. Capital is ready to go, technology is ready to go, and it's just about providing the right policy environment and the right structuring. So clearly, we are in a difficult macroeconomic situation, and it will require international collaboration to make sure that these kinds of opportunities can be invested in and can provide the growth story that we need to come out of this crisis.
Mr. Sinha, what's your sense? What do you think the key hurdle or challenge will be in this sort of step ladder approach? Will it be accessing the finance? Will it be the cost of finance? Will it be finding bankable projects? What do you think is going to be the key sort of big hurdle to get over?
Mitali, it's going to be all of the above. So we have to, just as policymakers, be very responsive to what entrepreneurs are dealing with in the marketplace, the challenges that they're experiencing in early stage financing, then in growth financing, and whether they are looking for debt, whether they're looking for leasing, whether they're looking for equity. We have to be able to make sure that they are getting the support that they need. And in general, the reality is that when you come out of a situation like we've had with the pandemic, we are going to find that people are risk averse. People will not want to really go off and do things that look very adventurous and very difficult and challenging to do. And so this is what policymakers really, really need to do at this stage, is to do the hand-holding and the support for our entrepreneurs, because they are the lifeblood of the economy. And we have to tell them, look, we are standing by you. We are going to give you the financing support we need. We're going to give you the policy support that we need. Go out and do great things. And I think all of the above will be required. As I said earlier, we've got to be able to stand with them and assist them as best as we can.
Kate, final word with you. India will, of course, have to find its own sort of mojo and successful blend in terms of public and private investment. But sitting where you are, what do you think are the one or two key things you would like to see and hear in terms of, policy impetus to know that India is serious about doing this?
I think there's a real opportunity for policy ambition in India. I think India has already shown a huge amount of leadership in the deployment of green technologies, and it's achieving decarbonisation of the economy actually very rapidly. India has a great story to tell, and I'd like to see the Indian example followed by many countries, lower income countries around the world, because India's made huge strides. So I think maintaining and accelerating that policy direction is absolutely crucial, but doing that in a way that provides the real incentives and support, as Mr. Sinha was saying, for a private sector and a banking sector that will be struggling to emerge from the crisis. So we need bold political decisions, we need robust policy decisions, and we need private-public sector collaboration. That's going to be absolutely crucial, and international collaboration. The governments of the world need to get together and say, this is the direction. The direction is sustainable. That's how we're going to grow out of the crisis. This is the new growth story for everybody. There will be social transitions for workers in some of the older, dirty incumbent sectors. They will need support from governments as we transition to a green economy. But if governments work together with the private sector and set a clear course, then I think this could be a huge opportunity.
Kate Hampton, Jayant Sinha, I appreciate your time today. Thank you both for setting up the case so forcefully, and I hope it opens up far more engagement and conversation on the subject. We're just getting started, so you will continue to hear many, many voices on green finance. But my deepest thanks to both of you for joining in today.
Thank you very much, Mitali. Namaskar.